Hi, I'm James Regan. I'm the owner and founder of Valor Legacy Wealth. I'm an RICP, a retirement income certified professional and financial advisor here in Scottsdale, Arizona. And I've been in this industry almost 19 years. I am a fiduciary, a registered fiduciary, and I spend a lot of my time helping individuals prepare for retirement in what we call the accumulation phase. And I help a lot of individuals, vast majority of my practice, work through the retirement or decumulation phase, and that's where a lot of my expertise. Why a couple bad years in the market can ruin, a lifetime of savings in retirement. And it kind of goes back to your 2007, 2008, 2009 scenario, the financial crisis. One of the things that happens is that market, when markets have corrections, and they can be fast and furious, and especially today in 2026, you're getting these high frequency trading algorithms. You got machines that are kind of, selling to the down or grabbing the upside. So what happens is the velocity at which things happen can be very detrimental. And so like if you go back to a 2007, 8, 9, it took almost a decade for your investments to get back to break even. And so, if you're a retiree or getting close to retirement and we have these, one of these multi-year sell-offs, nasty bear markets, which historically last 18 to 20 months, that can be really difficult to retire into. And I do a lot of this in my workshops where we talk about sequence of returns. And so if you start to take income from the portfolio while you're in a down market, because if all your eggs are just in your 401k rollover IRA nest egg basket, you're forced to take distributions, or you don't have any money to live on other than maybe you claim Social Security early, or you've got other assets you're living on through that. But that's not typically the case that I've come across in my practice. Most people, we got to plan for a multi-year event, because in the sequence of returns, I got tons of charts and iterations of this, but if Bill and Sally retire early and start taking draws on a portfolio and they got multi-year negative years while, taking draws from their portfolio, they're mathematically going to run out of money. And so the key is that if, you prepare for events like that, you've got some safe assets, you got some bucket tie strategies, there's lots of different ways to kind of prepare for that. But that's how a multi-year scenario can kind of, throw off a retirement plan that's, you built over the course of 25, 30, 35 years. And, we just haven't had one of those markets in a long time. And, we have markets like that. They come and go. Bear markets will come again. So if you're worried about a potential bad couple of years in the market, or how to better plan for, an environment like a bear market, which will happen, as many retirees do, #prepare.